Bitcoin fell 14.49% since reaching its double top at 69,000 USDT, or a new all-time high at $69,210 based on a USD. This correction to the downside has been found with an immediate rejection and an immediate pump back to the upside. The question is this sustainable, and are we likely to continue up higher in terms of Bitcoin's price, or is it now time to start getting bearish? Let's roll that intro and get right down into it. Hi guys, welcome back to the channel. Welcome back to another video update. Today, guys, we are of course taking a look at Bitcoin. Here we have BTC paired up with USDT. We're on the 4-hour Binance chart. So you can see we have the double top situation at $69,000, the move down 14.49%. Where we come down to $59,005. And of course, the close on that candle, guys, comes in at $61,410, right on the 50 EMA, 50 SMAs. And then we, of course, rallied up from here. Now, we are, of course, right back up into the range that we were talking about a couple of days ago, 65,323 to 67,508. This was actually our original target, but we did rally up a little bit higher. I'm going to go ahead and remove these now because they are completely irrelevant to what we are now talking about in terms of price action. So I'm going to go ahead and just tidy up some of, actually I'm going to leave that one on there because it is quite relevant. So here we can see a few different things. We got the breakout that we were talking about over the weekend. We hit the $69,000 or the new all-time high, depending on how you want to look at it. We have a 5-wave structure with that move to the upside. Let me show you, right? We were looking for a 5-wave pattern and we got it right here. That 5th wave being truncated, falling short, and then we've moved down. So what are we actually referring to here? Well, under Elliott wave theory, this basically now means that we're in the world of bearish territory. We should be thinking about these moves to the downside. Now, at the moment, we're holding quite strongly. And so this correction, that could be it. That could just be the correction done. And then we start rallying back up again. And if that is the case, then our next kind of major target is going to be, let me go ahead and pull this in here. It's going to be this little range between 71,595 and 76,000. Now, I would not be jumping straight into this one, going long just yet. Instead, I would be looking to see whether or not we actually get a good strong run and a closure back above 69,000 USDT and go long with a close above there. If we can do that, tight stop loss, TP up here, we might end up with a good risk reward ratio. Otherwise, what we're doing is potentially gambling. If we were to go long on the market here, with a reasonable stop loss, thinking that we're doing this, and actually the market just reverses down because we haven't waited for confirmation, then we're going to get stopped out. So I think there's a higher risk of that at the moment. So I wouldn't want to kind of go in on a long position without confirmation of things looking quite good. Now, the good news is that we've had the reversal to the upside here, this bounce to the upside in a really sharp V-shaped bottom, basically indicating that there was a lot of bullish momentum at the bottom. Okay, and you can kind of see that there was a lot of buying pressure right down here in this little range between 59,000 and 61,400, right? There's lots of buying pressure right in this little range. Okay, in the same way that there was lots of selling pressure where we find ourselves right now up in this range right here at the 66,773 to 69,000, right? So at the moment, we kind of find ourselves waiting for a confirmation. Are we going to get a close above here, or are we going to get rejected from here? If we get rejected from here, then chances are we're going to be looking at moving back down into this low range. And actually what we're finding ourselves in is a ranging market between these two levels until you get confirmation of a breakout, i.e. we're going to be breaking to the upside, or a breakdown and we're going to be moving to the downside, right? Until one of those options is happening, the chances are we're just ranging. So what we want to do is we want to try to trade the breakouts on this, right? We're going to go long if we close above this, tight stop loss, take profit, which we know is up here, 71 to 76. And if we break down, well, we want to trade down here with a stop loss tight and then target out the 200 EMA down here, right? What we don't want to do is just gamble in the middle. I mean, we could try, of course. We could probably go short where we are right now, stop loss above 69,000 and TP down here. We could definitely do the kind of trading the range if that's what we believe it is. I just think it's a little bit too soon for that. But there are a couple of options. We're going to be trading the breakout or the breakdown, or we just trade the range, right? Those are the kind of three options that we kind of have. Huge amounts of money up for grabs by trading these guys, depending on whether you're going to be trading breakouts, whether you're going to be trading breakdowns, or even trading ranges. There's still some fantastic opportunities here. Personally, I like to trade the breakouts or the breakdowns because I get confirmation of the positionings on the candles, and they have been very profitable for me. But of course, if I am to be trading, I'm going to be trading on BitGet. BitGet is my go-to platform when it comes to all my leverage-based trading. If you are new to BitGet, why don't you check it out? There's an affiliate link in the description down below. I think it's a really easy to use platform that's quite self-intuitive, has lots of resources to help you understand how to trade and all of that wonderful stuff as well. Now, if you do use the link in the description below, you are eligible for up to $30,000 of rewards, depending on how much you deposit and trade on the platform. There are terms and conditions associated with that, so not all countries and jurisdictions are eligible. So do make sure that you are aware of all the terms and conditions that can be found on their website. It's also worth noting that trading crypto is incredibly risky, and you do run the risk of losing your entire amount of capital. So do understand the risk, do some paper trading, do some demo trading. If you are new to this, check out the resources over at BitGet as well. Now, of course, it's worth noting I'm no financial advisor. I can't give you financial advice. All I can do is share my thoughts and opinions on the data in the charts as I personally see it. And, if you do have access to a financial advisor, you should probably consult them. They'll know your financial positions better than I would anyway. So let's go back down into our charts here. So for Bitcoin, we have this kind of interesting kind of place that we find BTC. Now, breakout, breakdown, or range doesn't really matter as long as we're kind of trying to make money from it. Essentially, that's kind of what we're trying to do. We're trying to trade the market, and we're trying to basically be predictive over where we think things are going. Ultimately, does it really matter? If you're trading breakouts or breakdowns, it doesn't matter which direction it goes in, only that you're on the right side of it. And if you're stuck in the range where you can trade and bounce between the two areas of the ranging market as well. Now, from our 4-hour stochastic RSI, we've got plenty of room for growth, but on the 1-hour time frame, it is up in this overbought area, so we want to be a little bit cautious here. And specifically with the yellow line about to cross the white line, the yellow line being the stochastic RSI and the white line being the average of the stochastic RSI. Essentially, that basically is showing us that we're going to see a cross. When we cross, we go bearish from here. So that could be a small correction coming for BTC on the 1-hour time frame. Be very mindful over that. Now, if we take off the stochastic RSI, throw on the divergence indicator, the yellow line here is the relative strength index, the RSI. And here we can see there isn't actually terribly too much going on. We've still got some momentum to the upside to be had. So that's looking okay. We did have the bearish divergence again, indicating to us that we were likely to see a drop to the downside, and it got flagged just here as we hit $69,000, which was really nice to see. From our volume point of view as well, you can see huge volume coming in for selling, but since we've started this bounce to the upside, the volumes have dropped way back down. This is not a good sign for some supported move to the upside. So just be a little bit cautious here. I expect us to get rejected within the range between 66,773 to 69,000. And like I said, we could trade this as a ranging market with a stop loss just above 69k, giving us good risk reward ratio, coming in at about 4.26 just to kind of trade the range, because I do think we are likely to come back down towards the 50 EMA, 50 SMAs, and from there likely to see another bounce. So for the most part, Bitcoin finds itself in a pretty nice spot. Interesting to see how the development of new all-time highs has gone, and where we think things are potentially heading next. I can't rule out still a further push to the upside with $76,000 as our targeted range. Guys, that's going to wrap up today's video, but why don't you check out this one right here, where I'm discussing what is going on when it comes to Avalanche's AVAX.